Thanks for tuning into this results conversation with ICICI Securities. The new initiatives have lent support to it. The Q4 was good, and the open architecture has widened the client sourcing funnel as well. Let's discuss the Q4 performance, the year's performance, and the outlook ahead with Mr. Chandok of ICICI Securities. He joins us right now on the show, and the CEO needs no introduction. Mr. Chandok, good having you. Thanks so much for taking the time out, sir. Congratulations on a good quarter. How would you sum this up? We're seeing some signs of this in banks in the US as well, which are actually benefiting with the market volatility. You've taken some initiatives which will help you in Q4 too. Tell us about the quarter and the year, and tell us about how do things look like in the near term.
Well, thank you very much for having me in this show, and thank you for your comments on our results. These are very unusual times, as all of us have been experiencing. And in times like this, having a business model like the way we have, we really feel, very fortunate, because if you really dive behind the skin of our business model, there are a few things I just sort of want to highlight. First and foremost, when we look at our business model, we are a company which does not carry any inventory. We are a zero inventory company. Again, the way our business is constructed, delivery is all digital, so we are not worried about, or we do not need a physical infrastructure to deliver our services. Thirdly, we are a company which is virtually got very low to zero receivable, on our balance sheet. We tend to typically collect money upfront, even as clients transact on our platform, ICICIdirect.com, which is the principal axis of our business. We are a cash-rich company with a high ROE and a strong operating leverage. It's a very digital model. A very substantial part of our revenue comes digitally. So when you sort of juxtapose these sort of aspects of our business construct in current times, I think we are fortunate to have this kind of a construct, and that is what is playing out for us just now. We are also seeing that when the whole setup is facing this unfortunate, difficult situation and is facing lockdowns, markets being a part of essential services are operational. So it also gives us an opportunity to keep our business operations continued, unlike some of the manner in which other businesses are faced. So the challenges that typically other businesses face in form of either supply chains or in form of delivery sort of impediments, or manufacturing sort of lockdown-led impediments. Fortunately for us, these don't impact us in current times.
Okay. Can you tell us about some of the initiatives? I mean, there's the brokerage notes that I read are full of the two things. One, the revenue sharing arrangement that you have with ICICI Bank now, leading to some visible benefits, and the open architecture also leading to widening of the funnel for acquisition of customers. Can you dwell a bit upon that? And what do you think that does in FY21, which is the full incremental year of both of these initiatives compared to the previous ones?
Okay. So yes, let me start with the arrangement that we entered in the beginning of the year with ICICI Bank. The idea of entering into this arrangement was actually thought through very carefully. And one of the reasons why we felt that an arrangement of this nature would benefit both the entities is because from a bank's perspective, bank is always seeking clients to have stickiness with them. Bank is always keen to ensure that their CASA balances grow. And we found and demonstrated to the bank empirically that having a broking account or an equity account like ours, a 3-in-1 account as we call it, attached with their affluent segment savings customers, actually tends to lead to an increase in CASA balances by a significant amount as soon as the client starts getting active. From our point of view, we realized that we have a very sticky proposition, and once a customer starts getting used to our platform, there is a tendency to stay on. This is actually borne out by the fact that even when this company was formed about 20 years back, we still have a very substantial part of our currently trading customers who were acquired as far away back as 20 years, 12 years, 15 years, and so on and so forth. So there is a stickiness quotient for us as well. And given the fact that we thought of our customers like that, we felt that rather than to harness this opportunity in a much bigger way, we ask our banking partners to put attention behind the more appropriate, the affluent segment who are actually interested in markets. Encourage them by providing an activation capability, because it's only on activation that they get revenue. For us, we realize once a customer gets active and gets used to our platform, there's a lifelong opportunity for us to harness the business from that customer. The arrangement, as you would recollect with ICICI Bank, is a payment of a sharing of some part of the brokerage that happens only for 2 years. Thereafter, everything that we earn from that customer actually comes to our account. So an active customer for us gives us an opportunity to harness the lifetime value, which is extremely valuable. So we are, just as you correctly said, this is the first year of this arrangement. We expect that, this will be an accretive arrangement which will keep adding to our base year on year. And it's a great arrangement. It's a win-win partnership for both of us. Last quarter of this fiscal year, as you again correctly pointed out, we pivoted to digital as an important source of acquiring customers. I think that is helping us, standing us in good stead in the current times. Pivoting digital would actually mean that a couple of important things. First and foremost, a customer need not be an ICICI Bank customer to become our customer. So it means that we are open to all customers, whichever bank he may be traditionally banking with. He can continue with that bank account and then still become an ICICI customer. The second important aspect of pivoting digitally means that we today have a fully capable, I would say, digital acquiring workflow, which means that there is no need for any person to physically meet a customer before he becomes a completely active customer. It can all be done remote, it can all be done digital, it can all be done on telephone. So I think that stands us in good stead in current times and the times that are to go forward. As we think about the present and the future that is unfolding, clearly we are seeing that there is opportunity to digitize many more things which tends to be not very visible in a normal scenario. Many of these things are giving us an opportunity to digitize. What it is eventually going to result in, two things. I think we can become far more efficient than we are as a company. So it means we can demonstrate operating leverage even better. And secondly, it will help in improving customer experience. So I think these two are going to be principal areas of focus for us. How can we use the current scenario to become more efficient and improve customer experiences at the same time by digitizing processes?
Okay, well, and certainly hopes it does even better than what you're thinking. Now, my question though, in terms of numbers, Mr. Chandok, is would you believe that this 26% revenue, brokerage revenue uptick that we've seen, would the going ahead in FY21, this number be directly proportional to that daily customer acquisition rate and how it ramps up? Or would you believe that the chances of brokerage revenue growth could happen even if after a certain point of time, if you hit a critical base and then the number starts to soften a bit?
So, again, that's a great question, and I would answer this question, the way we think. Let me just, pivot back to answering the question the way we think. When we thought about, these aspects of how it will eventually translate into a eventual financial number, we realized that, our dependence today is going to be linked to where the markets are going to behave, which to a large extent is outside our control. So we put our entire attention on what the input parameters are. So we pivoted more internally to figure out, what are the things that we can do and we need to do to ensure that as and when the market plays out its opportunities, we are best positioned to harness those opportunities and take full advantage of the growth that is there in the marketplace. This could be there for any reason. It could be simply there because the market itself is growing. It could be there if there is a consolidation, then we should be able to take advantage. Or if there is a new opportunity or new method of doing business, then we should be able to take advantage. So we thought, let's put our attention behind input parameters. What are the input parameters? What is the rate of customers? How can we get more and more customers on our platform? So we put our attention behind that. How are we doing this? We strengthened our banking partner. We went ahead and pivoted again digitally so that we can acquire an open architecture model of customers. We are, as we speak, increased our partner network. We have sort of increased our partner network, which is now crossed over 9,000 partners who are working for us, acquiring customers who also can do it digitally without having to meet their customers. It can be done on phone digital combo. And we're also engaging with other partners, other categories of partners who would want to, work with us for this purpose. So input parameters is the area of focus. We are increasing that in a very concerted way. The second is the customers who are sitting within the company. If you look at our customer base, we have about 4.8 million customers. The customers who are active is currently around 1.4 million plus, right? Almost tending to 1.5 million customers. Then we have another 1.3 million customers who had been active sometime recently in the past, but not in the last 12 months. So we have a large gunpowder sitting within our own company, ready to trade, ready to do business. So we realize that we need to sharpen the way in which we look at this customer, understand his behavior. And today tools and digital data is available in so much of abundance, both internal to the company and even from external sources, that it is possible to actually start understanding preferences and propensities of these customers and start engaging these customers in a low-cost digital mode and doing business with them in that manner. So our attention is twofold: increase number of customers who are coming by a disproportionate pace compared to the past, and get your existing customers more excited about doing business with us by improving their experiences and engaging with them in a more in the language that he is wanting to engage with us. So that's the area we are focusing. Outcome, we believe, is something that will happen. We are more focused on the things that we can control. We believe that if we get these things right, put our attention behind it, we should get an amplified benefit in an outcome sense, the financial numbers that you talk about. And that is what we've been doing. We'll continue to keep focusing that. We'll redouble our efforts there. So whatever numbers you've seen is basically an outcome of us focusing on these input parameters.
Okay. One final question then. How do you see FY21 as a year? Because if during the COVID lockdown as well, you are on the customer acquisition numbers that you have been in the past, is there a sense of what happens post-lockdown open with normalcy returning to banking operations and all of that, and the newer initiatives, not just equity and broking revenues, but the other things? What do you do for the year?
So clearly, I think this has been a very difficult period, and the way things and the data flow is coming, it looks like this difficulties are not going to fade away in any near future. So we will go through an extended phase of slowdowns, low growth, some maybe even negative growth. We don't know how it is going to play out in the economy, but it's certainly going to be a difficult period. Again, times like this, what are we thinking of, apart from the stuff that I just elaborated, is to also diversify ourselves into newer areas which are not linked with markets. And we have identified, not just now, but sometime in the recent past, two such areas. One is getting more active into protection services, and the second is getting more active into distribution of loan products. So these two again are large markets. These are underpenetrated markets in India. The customer is the same customer who's an investor, also at some stage of his life cycle turns a borrower, at some stage of his life cycle reaches out for investment or buy protection services, the insurance services. So we clearly felt that there is natural synergy for us to get into these two services. Our endeavor is going to be, has been and will continue to be largely digital in delivery. So as we speak during the course of this year, we will be increasing our attention in expanding our portfolio of opportunities that we can harness from our customers, getting more active than we were in the past on distributing insurance solutions to him, and more active than what we've been in the past on loan distribution businesses. We believe as a consequence, we will become a lot more diversified, lot more digital than we are already.
Okay, we wish you all the best for the quarters ahead. Thank you so much for taking the time out, and most importantly, please stay safe.
Thank you so much. Wish you all the very best as well. Keep safe.
Thank you.
Bye-bye.
Yep. And viewers, thanks for tuning into this broadcast.